If you own an Airbnb, you could be sitting on a gold mine of tax savings and not even realize it. So many aspiring Airbnb investors stay stuck because they're worried about whether potential properties will actually create financial freedom. Meanwhile, experienced investors are quietly using strategies the average person has never heard of to keep more cash in their pocket. Today's tax expert shares how you can use cost segregation to maximize your deductions, increase your monthly cash flow, and scale faster towards financial freedom, even if you're just getting started. Let's jump in.
I am super excited. I've been waiting to do cost segregation episode with an expert for a long time. So, Jerry, let's set the stage. What is a cost segregation study?
So, a cost segregation study is one where we take a property and segregate and put values on the components that make up the dollar value of that property. So, for those of us old enough to remember the McDonald's jingle about a Big Mac, two all beef patties, special sauce, lettuce, cheese, pickles, onions, if you can picture that Big Mac as a hamburger, which it is, and equate that to a building. So that Big Mac's going to cost $6. The all beef patties might be $2.35. The special sauce may be 67 cents. The pickles may be 13 cents. The piece of cheese may be $1 until all of those components that make up that Big Mac equal $6. We do the same thing to a building. That building is $6. The walls in that building may be $2. The flooring may be another 50 cents until all those components that make that building up equal that same $6 cost that the building is. Of course, no building's $6, so you're talking $600,000 maybe, but you get the concept. The components equal the total cost, and then according to the tax code, there's two ways to depreciate a property.
Okay.
You can either use what's called a straight line method, where on a residential rental long term, it'd be 27 and a half years, commercial property, 39 years, which Airbnbs would fall into that class, 39. So instead of letting the IRS trickle your money back to you over 39 years, you can choose to work with a reputable cost segregation company that can carve out the different assets that make up that building, place a dollar value on them, match it up against another section of the tax code that says, hey, wait a minute, you've got carpet in there, you've got plumbing fixtures, you've got countertops. Some of those assets can be pulled out of that long-term depreciation and depreciated much more quickly. So the more deductions the owner has offsets the income, less taxes they pay.
That is a great example.
Yeah, the Big Mac made it work for me. Cullen is our numbers
Good.
genius. I have basic understanding, but he's the one that geeks out on them. I can completely wrap my brain around the Big Mac is more than just the beef patty. Thank you for that.
Absolutely. The next time you go by a McDonald's, you'll think of me.
So, how is a cost segregation a gold mine of tax savings for Airbnb investors?
Airbnb investors are kind of a special category. They have certain rules that they have to play by in order to be able to maximize their deductions. If someone is a quote real estate professional, they have got to put in an active amount, 700 or so hours a year in the real estate business. Airbnb owners have a material participation component that they have to meet, which is only 100 hours. So we see a lot of doctors and their spouse and a lot of everyday mom and pop investors that one person will have a W 2 job, the other person will not, and decide, wait a minute, I can put in 100 hours managing these Airbnb locations. They document it, and now they can use the deductions from the real estate as active deductions, no longer passive deductions, but because they are actively involved giving it 100 hours, they can use those deductions to offset those higher W 2 incomes that maybe the other party has.
Put out.
That is gold. That is
Yes, it
exactly
is.
what I was hoping you would say. And I do feel like this is something that super smart people, smart Airbnb investors have no idea about. When Cullen came back and told me about cost segregation, I was like, so I understand, like the house may last 37 years, but you're right. We're going to switch out the appliances. We're going to have to replace the floor. We're going to have to replace the saunas, the patio, all these things that we added. And I was like, all that I spent to make this home beautiful and a great investment is coming back so much faster as a tax break.
Yeah, especially if you can take those as an active investor. So it's active income. You're spending 100 hours and you need to document it. You're involved in the marketing of it. You're involved in arranging for the cleaning of it, things like that, just in case the IRS comes calling. But you've got your records. There are huge tax advantages, especially when you can take those deductions and offset a $500,000 income that a physician or higher income earner may have.
Absolutely. Or even if you just have a larger portfolio offsetting that.
The deduction is against the income. So depending on the size of the deduction. So if I generate $30,000 in short-term rental profit and I have a cost segregation study done that's maybe say $60,000 in depreciation, that first $30,000 is tax-free money that's coming out of the profit from the Airbnb, and then the leftover depreciation can be further applied to my W-2 income, correct?
That's correct. And if by some blessed reason you create enough deductions to offset the income totally, then that just carries over into the next year.
Okay, earlier you mentioned using a professional to do a cost segregation study. Why is that wise instead of trying to DIY it with some software on your own?
A couple of reasons. Should there ever be any question or any opportunity for scrutiny for the IRS, the first question they will ask on a cost segregation study is, did somebody physically come to that property to document the assets that make it up? On a DIY, you're taking your own pictures. There's room for inflating the aesthetics or the numbers there. Not that a cost segregation study would cause the IRS to come and scrutinize anything, but if they ever did, you've got the ironclad proof that yes, somebody physically was there. There are a group of engineers and experts that are looking at these photographs that are able to document the assets.
A company that focuses on this has done it thousands of times, hundreds of times a day, a third party as opposed to an individual doing it the first time on their own. It
Good
seems
point. And if I can just put a quick plug in, I can sleep at night knowing that the folks that I represent always seem to do the right things. We've done over 60,000 assorted projects across the world, and never, never, never has the IRS overturned any of the work that we've done on behalf of a client.
there you go.
Sleeping well at night, you can't put a price on that. I will DIY
Yeah.
almost everything, but I will not DIY electric, plumbing, or taxes. So
There you
I
go.
fall well in line with if you could pay a professional to make sure it's done properly and not cause yourself any problem. I don't know that many people that look good in orange. It's well worth the investment.
Jerry, you already mentioned who this works well for, right? For the short term rental investor, growing a portfolio, high net income W-2 earners. What type of investor or person doesn't benefit well from a cost segregation study?
If somebody is buying property to fix and flip, may not necessarily be the best candidate because they'll get the advantage of the tax savings 1 year. And if they're flipping it the next year, there's something called recapture where they have to pay a portion of that back to the IRS in taxes. So the juice might not be worth the squeeze.
So you want to be planning to hold on to this property for a while. And
Yeah.
if you do get rid of it, make sure you're doing a 1031 exchange.
Typically, we would recommend 3 years or more for holding a property. And then there are always additional strategies to mitigate any tax implications 2, 3, 4, 5 years down the road when you sell that property. Certainly, 1031 is one avenue, and there's some others as well.
And for our listeners who don't know what a 1031 is, Cullen, why don't you jump
I'll
in?
let Jerry do it. He's the pro.
Okay. So a 1031 typically is when you sell a like kind asset and basically trade it for another like kind asset so that the capital gains off of the first asset are mitigated because you're using that as seed money for the second asset. Typically somebody would trade up so they would buy a property for 300,000, sell it for 350 and buy something for 450 so that the gains that they've incurred on their first one would be offset because they're buying something at a higher value.
And the
Yeah.
depreciation moves forward too, correct?
Depreciation, yeah, there's depreciation that continues to be able to take advantage of.
Okay.
Yeah, with personal friends that have just done this for as long as we've known them. Our babies are now in their late teens and they just keep upgrading the houses. It's so much fun to watch, and it's such a smart way to make money without incurring all of the taxes.
Sure.
Are there any special rules or laws that people should know about before they're jumping in with a cost segregation study?
Not necessarily any special rules or laws. I would advise people who are thinking about buying properties take a close look at where you want to buy that property because certain parts of the country naturally come with higher land value assessments
Mm,
than other parts of the country. So I've seen people, especially in resort locations, they may pay $1 million for a condo, and that land assessment $600,000
right.
because of where they bought it. So in the back of their mind, they're thinking, "Wow, I spent $1 million. I've got a lot of dollars to segregate." But in reality, they've only got $400,000 because that land value is not depreciable. So take a good look at the assessment values before you buy if there's an option to be selective in buying different parts of the country where a assessed value may be less than another part of the country.
Sometimes the sand can cost more than the house.
Exactly.
Stop looking
Exactly.
at me. Are any myths or misconceptions that you'd like to debunk about segregations?
Yes, absolutely. And it amazes me the number of tax professionals that still sometimes turn a blind eye to the concept because they have a lot of myths in their mind about what cost segregation is. First off, tax professionals and consumers like you and I alike might think, well, this is really, really out of my league. That's reserved for the mega $1 million properties. 10 years ago, 20 years ago, somebody with a $200,000 townhouse would not think that they could even qualify for a segregation study. But through technology, gosh, we're finding values in $150,000 properties all day long.
Let me jump in on that because it's exactly my experience. So my CPA has been my CPA for 20 years. He is the partner CPA. He is a great guy. He has done so many wonderful things. And when I came to him and said, I'm going to do a cost segregation study, he said, well, you sure? That's expensive. I really just see those on multifamily deals. You know,
Yeah.
you're going to spend tens of thousands of dollars. So we did just recently a cost segregation on a $300,000 new construction. The land was about 25,000. The building was
Wow.
265,000. You
Yeah.
guys did.
To my point,
And it
new
was
construction.
we paid $3,000 to CSSI. And when he saw that and saw the study, he was like, "Okay, this is great." And the $3,000 is tax deductible expense, so really only out $2,000. And you
Sure.
guys came back with about $80,000 in depreciation.
So that's just about 30% of that entire property was able to be expensed in the first year. So that $80,000 as an Airbnb investor was able to be used to offset $80,000 worth of income. That's great.
And there's no restrictions. So we have 14 properties. For next year, we'll probably be picking another property. Are there any kind of
Sure.
limitations to that?
No limitations there at all. And it's funny, I worked for a boss years ago who said, "You know what? You don't know what you don't know." And it is so true. I'm reminded of that every single day. There's so much that we just don't know we don't know. And the tax code's like an onion. When you own some real estate and start peeling little layers back, all of a sudden other pieces of that onion surface with more opportunities to peel back and find tax savings.
I've heard it said before, our tax code just through and through is favorable to real estate investment. And I say all the time that short term rentals are the highest return on investments in real estate, and adding the special treatment of being active investors in the tax
Right.
code. So, guys, if you're out there and you haven't done a cost segregation study and you own a property, let's get to it. And those of you that are thinking about investing, work this into your numbers.
As far as other misconceptions, some folks feel, well, you got to do this the first year you buy a property. We do an awful lot of projects for clients who've had properties 2, 3, 4, 5, 10 years. There's no need to go back and refile past tax returns. It's just a one time catch up deduction that pulls all that depreciation forward. Now we have to notify the IRS that you're going to change that method of accounting, but That can be a minor process in comparison to the tax savings that can be garnered without having to go back and spend all those hours refiling all those tax returns.
Okay.
Yeah.
Can you clarify for me, does the property that's going to go through this process have to be purchased after January 2025 when the big beautiful bill was passed to get 100% bonus depreciation from the cost segregation study?
Um, no. So if somebody bought a property in 2017, for example, there was a Tax Cut and Jobs Act that stated any properties put in service after September 27th, 2017 through the end of 2022 also qualified for 100% bonus depreciation. Then in 2023, that 100% dropped to 80%. And 24, it dropped to 60%. And in 25, it automatically went up and with the big beautiful bill up to the 100%. But that is for properties that were number one purchased after January 19th, 2025, and then placed in service after January 19th, 2025. So we get a lot of calls from clients say, well, I bought this at the end of 24, but I didn't put it into service until July of 25. Does not qualify for 100% bonus depreciation. It has to be purchased and placed in service after January 19th, 2025 in order for it to qualify for the 100% bonus.
So it looks like the only kind of weak year here is 2024. In 2023, you're 80%, 2025, you're back to 100%. So,
Right.
you're just going to get 60% of that $80,000 in depreciation. So it basically works out that 2024 wasn't the best year. Other than that, you're 80 or 100%.
So, for our listeners who've been sitting on the fence, waiting and waiting for the perfect time to invest in an Airbnb, it is now past January 2025. You can get
Absolutely.
bonus depreciation, 100% of it. Now is the time.
Yes.
What is the range of tax compensation an investor can expect from this cost segregation?
So that depends largely on their taxable bracket. So if somebody is in a 20% tax bracket, if there's $100,000 worth of deductions, they're going to save $20,000 in taxes, right? But if they're at a 37% federal tax bracket, they're going to save $37,000 in taxes on that same $100,000 worth of deductions.
Right.
And then some states, also incorporate the federal deductions into the state tax savings as well. And some states don't do that. So, depending on the state you live in, you're going to get the bang on the federal and maybe an extra bang on the state as well.
That was a question I was going to ask if it flowed through, because you always hear people carefully say federal tax deductions. And is that just
Correct.
because some states take the federal adjusted number and some don't? And so, in the case that the state took the federal adjusted income number, the tax savings would flow through to a lower income level at the state and county level?
Well, the government would allow for that federal deduction in every state. Whether there is an additional deduction on the state level is a state by state
Okay.
call, for lack of a better way to put it.
Call CSSI.
There you go.
I know everybody's different. How long does it take to have a cost segregation completed?
So the actual time in the engineering process typically ranges 3 to 5 weeks. It really depends on the client. If we engage a project May 1st and the client is able to send us all of the documentation that they have regarding that project, maybe there's an appraisal, maybe they have architectural drawings, maybe they have an environmental survey. We'll send somebody to the project to photograph inside and out. If we can get all that done in a week, then that project goes to engineering May 8th. And typically by the first week of June, it comes out the other side with the final calculations that the CPA can use to apply to the return.
Yeah.
Wow.
I remember ours was pretty quick.
Okay. I mean,
Yeah.
for those when you don't know what you don't know, to echo you. So, like, oh, it's complicated. It could take 6 months, and I don't have that much time. It could take 3 weeks if you have your ducks in a row.
Right.
And some clients come to us with libraries of information and others just a cocktail napkin. But we've got a checklist that we need to go down and say, do you have an appraisal? Was there any site inspections that were done? Or are there any evidence of work invoices that you have. We want to get it right for the client.
So you mentioned invoices. Are there things that investors can add to their properties prior to the study that are more favorable in terms of tax deductibility?
So if you think of decorative amenities, any types of chair rail molding, any extra landscaping that they might do outside, if they're thinking about replacing floors and say, well, I want to make this one elegant place, I'm going to put ceramic or marble flooring in it. That marble or ceramic flooring is going to be a 39-year asset and cannot be accelerated.
Mm.
But if they put a laminate wood floor in there, then they can write the whole thing off in the first year.
Well, that's lovely that you said that because I just got a $10,000 quote for laminate flooring for the place we're working on
There you go. Yeah, do not put marble or ceramic in.
now.
Okay.
That's an excellent tip. Something from our cost segregation study, we ended up pouring a cement patio for a fire pit with twinkle lights
Nice.
and Adirondack chairs. And that was a last minute addition. It's just the way that the land dropped. We had to sort of make this space. And it was an unexpected expense, but it also played very nicely into our cost segregation. So I guess it goes into the landscaping that you were speaking about.
Yeah. There are some things that are surprising how they end up fitting as far as what can be deducted and what can't be deducted more quickly.
All right, no marble, more fire pits.
Well, fire pits and laminate floor.
Yeah.
Well, Jerry, this has been a delight. To wrap it up, last question. What do you wish people knew about cost segregation?
I wish more people knew that it was affordable, that it's not something as it was 20 years ago, only reserved for the mega million-dollar complexes. Mom and pop, you and I, buying $150,000 townhouses, there is a good opportunity for tax savings in a lot of those types of properties. The process is easy, it doesn't take a lot of time, especially if somebody just bought a property, they've got all their records right there. It's easier than people think.
I found it very easy.
Yeah, I was waiting for like a big to-do list and it was very straightforward.
They did all the
Yeah.
heavy lifting.
Yeah, it was amazing.
Mic drop.
Mic
Okay.
drop. Once again, Cullen has proved that taxes can be exciting when you talk to the right expert about the right topic.
Thank you
Love
so
it.
much, Jerry. So there you have it. You now know what cost segregation study is and why it's a potential gold mine for tax savings on your Airbnb investment. If you're ready to get started, email me at ctate@hostcoach.co so I can connect you with my favorite CSSI partners. Working with the right professional is essential to getting every dollar out of your Big Mac. We truly hope you got benefit out of this episode and share it with other investors. Remember,
Our joy is in your success.